The National Oil Corporation has cut the cost of diesel by a further 1 shilling to 102 shillings in the capital Nairobi as it seeks to expand its market share across the country. The cost of diesel went down by 1 shilling and 80 cents this month after the Energy Regulatory Commission made its monthly fuel price adjustment. NOC, which is owned by the government, is required by law to help regulate fuel prices by setting low prices to cushion Kenyans from the high cost of fuel propagated by private fuel marketing firms. However, NOC's low market share has made it an ineffective tool, leaving consumers at the mercy of privately run firms, a factor that saw the government intervene by mandating the Energy Regulatory Commission to set the maximum fuel price in order to cushion consumers from high fuel prices. Meanwhile, the local insurance sector is projected to grow by 18% by 2015 due to an expected increase in the uptake of insurance premiums as insurance set up microfinance insurance policies. Kenya currently has one of the lowest insurance penetration rates at 3%, largely on the back of compulsory insurance for motor vehicles and formally employed Kenyans. According to Standard Investment Bank, which carried out a survey on the local insurance sector, out of the 47 insurance companies, 5 companies command 40% of the market share, a factor that has made it difficult for the sector to grow. Analysts at Standard Investment Bank, however, expect the sector to keep growing with 6 insurance companies already listed on the Nairobi Securities Exchange. Elsewhere, the Capital Markets Authority (CMA) is set to introduce new regulations that will enable commercial banks, fund managers and insurance companies to trade bonds directly without going through stockbrokers. The regulations will allow the institutions to have authorized security traders, eliminating the need for intermediaries to trade bonds for the institutions. CMA says the move is aimed at clamping down on the cases of fraudulent dealings within the local bonds market. And finally, Zimbabwe may not be able to hold elections this year due to a shortage in funds in its public account. The country's finance minister Tendai Biti told international news network BBC that the country's public account has dwindled to as low as $217 last week after the government paid civil servants. Minister Tendai, however, reiterated that the country had already received an additional cash injection that is set to stabilize its accounts. Zimbabwe was set to hold elections this year, with President Robert Mugabe's ZANU-PF expected to face off with the Movement for Democratic Change. The country is also expected to hold a referendum on its constitution later this year, an exercise that will cost taxpayers over $200 million. Henry Githaiga, Citizen Business.